Hello everyone. Today I am going to provide you with an overview of MCX natural gas technical outlook for the coming week 22nd of August to 26th of August. And prior to starting with that, I would like to take a review of the previous week outlook which we have shared for the last week. So as on 15th of August, we have given the outlook for 16th to 19th of August in natural gas. As on 15th of August, the closing for natural gas was at around 698 and the bias was down below 620 odd levels. As per the write-up which we have mentioned, that technically one can hold the range to downside outlook with a broader trading band of 550 and 400 for the coming weeks. Since the counter has entered into an oversold zone on the daily chart, thus the counter can witness volatility and pullback, which should be sold off from resistance levels, expecting lower levels consolidation. So that was the outlook which we have shared last week, and the range which we have mentioned was 720 to 780 on the higher end. The major support was at 600 mark. So that means we have recommended that any pullback towards 720 or 780 can be looked for contra trading shorts in natural gas. Now, if you see how things have panned out last week, then natural gas from the lows of around 698, it made the low of 698 last week, Friday. Monday was closing, that was 15th of August. On Tuesday, it opened with a positive bias. It made the low of 698, and from those levels, it witnessed a pullback towards the highs of 767, which was close to our resistance of 780. And from those levels, from the highs of 767, it slipped down once again towards 700 mark before ending the week at 742. So it ended last week up 6.4% below our given mentioned resistance levels, but over and above our first resistance of 720. So for the coming week, as we can see here on the charts, this red line indicates a strong resistance zone for natural gas, and it has tested this zone for almost 4 to 5 times. Even it has formed a kind of daily doji chart candlestick which indicate undecisiveness for natural gas. But as we know that the major trend continues to be positive in natural gas, so till the time it is trading over and above 700 followed by lower support of 600 mark, the bias will be buy on dip and sell on rise towards supports and resistances level. So for the coming week, the bias is positive over and above 700 levels as mentioned here. So this 700 will be a kind of tug of war zone for bulls and bears initially, until the time natural gas is trading over and above 700 mark. It is open towards the higher levels, and maybe it can give a fresh breakout over and above 780 levels for the resistance targets of 860 and maybe higher thereafter. So if we see this chart, then we can find that this is a kind of inverse head and shoulder pattern, where this is the first shoulder followed by the head, and then this is the second shoulder which is in formation. So once this red line is being taken off, then it will be treated technically a kind of breakout for natural gas for much higher levels in days and weeks to come, and this will be nullified only once it sustains and slips below the support levels. So the immediate support level for the coming week will be at around 700 mark, and the major positional support will be at around 600 levels. So till the time it is trading over and above these levels, the bias is buy on dip with a potential target of 780 followed by 860 on the higher end. In as per the write-up also, we have mentioned that for the coming week, the silver line will be at around 700 mark. Between bulls and bears, initially any kind of dip toward those levels can be looked for trading longs with strict stop losses, while up move towards 850 and higher can be looked for some kind of contra trading shorts with strict stop losses. But as mentioned, as per this chart, if this inverse head and shoulder pattern gives a breakout, then natural gas can even be open towards the higher levels of 920 followed by much higher levels. So a contra trading shorts should be looked with a strict stop losses, and very disciplined way of trading contra bet should also should only be looked at around resistance levels, which is at around 860 followed by 920 on the higher end. So overall, the bias continues to be range to positive for the coming week for natural gas till the time it is trading over and above 700 mark for the resistance of 860 and 920 to conclude. Now, in respect of the view, we have shared a positional strategy which we have initiated as on 3rd of August. When natural gas was trading at 622 mark, we had given an outlook of range to pull back. And in order to play this outlook, we have initiated this strategy where we have sold 700 put and we have bought 620 put in the ratio 1:1. And the bias was that if by 24th of August, natural gas closes over and above 700 mark, then this strategy would have given 66,000 per lot profit. As per the last closing, as on Friday, this strategy is already in plus of 54,000 rupees per lot. The other strategy which we have initiated on positional strategy as on 3rd of August was crude oil. There also we have mentioned a range to downside bias for 17th of August expiry. This strategy was initiated on 3rd of August for 17th of August expiry, where we were expecting that this closing should be below 7,200 mark, but at the same time from lower levels there should be some buying interest, and ultimately it should close just around 7,200 mark. And in line with the view, natural gas has closed just around 7,200 levels, giving us the maximum profit of 33,000 rupees per lot in the strategy as on 17th of August. If you find our inputs and review valuable, please contact us on the given mail IDs and the contact details for future reports and the strategies. It will be a pleasure to serve you. Thank you for your precious time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.